In trading, knowledge is power, and lack of knowledge in what you're doing can be costly, very costly. So you need a solid foundation of quality market education. Whether you're new to trading or a seasoned veteran looking to add advanced strategies to your arsenal, there's always something to learn and something to improve on. And now you can access the same knowledge that professional traders receive with Market Rebellion's Trading Education. I'm Bill Johnson, Head of Options Education here at Market Rebellion, and we've assembled a comprehensive curriculum based on decades of real trading experience, covering everything you need to know about trading options from beginner to advanced. We go way beyond the nuts and bolts of options theory to teach you how to apply specific trading strategies and the techniques needed to adapt your trades when markets shift. Regardless of your goals, you'll gain access to the education you need with easy-to-consume lessons so you can learn to trade with confidence, enhance your knowledge, and master the practical skills required for market success. So please join us for in-depth trading education only from Market Rebellion. Hey, good morning once again, Market Rebels. And yes, it is morning again. Stu, we have to do a recording here in the morning, but what are the futures looking like? I think we're up a bit, aren't we?
The futures are actually just a tiny bit down.
Oh, a tiny bit down now? Okay.
Um,
Not big one way or another?
they're up small, up super small, like what less than a quarter of 1%. It's up.
Yeah, it's pretty flat. So anyway, normally we do this at 4 p.m. live. Once again, we've had to do it early, but at least that's what it looks like the market's going to do. We'll have to see what happens at 4 p.m. But for today, we've got a very cool topic, and this came up about Stu and I were having some conversations, and from all of the Q&As and talking to traders and coaching, and people say, well, what's delta? Somebody told me it was this. Yeah, but somebody else told me it was that. What? Well, yes, there are different interpretations of delta. They all
And so,
hinge.
and people so often say, not often, but every now and then you hear, well, I don't have to know what any of the Greeks are. I'm just going to buy these calls and watch the stock go up and make money. Yeah,
Yeah, no, you definitely need to know these, but it's not just about the definition. It's also different interpretations. And so what we want to do is talk about that just with delta. So
okay.
our Chalk Talk question for everybody this morning is, in how many ways can you interpret delta? Now, this is meant to be not a hard and fast answer like we normally have, or actually usually don't. We usually have it depends. But
Yeah.
this is more of just a thought question. There's different ways, and once we go through some of the ways here to show you, you can start looking at different ways to interpret it. But these are probably four of the big ones. And so that's what we wanted to talk about here, four interpretations of delta. Now, again, they all hinge on what I think is really the main definition, where the whole thing starts, where it's coming from. They're just different ways to view it. But I think it will help traders to kind of go through that. So let's take a look at interpretation number one, Stu, and that is the slope. So as you and I talked about in Miami, slope, think of it like a snow ski mountain. Is it flat or is it very steep? And if it's very flat, you've got very low deltas. If it's very peaked, then you've got very high deltas. So slope of what, though? It's the slope of your risk graph, your profit and loss diagram. And what it does, the delta, it shows how your profits change with changes in the stock's price. That's the real reason we want to know delta. If the stock goes up, how much am I going to see show up in my option? So let's take a little closer look at slope. And before we do, quick reminder for everybody, marketrebellion.com/get started. Check that out, Stu.
over 40 courses, no sign-ins, lots of great articles on topics just like this to help you make better decisions. So let's take a look at shares of stock. If we have shares of stock, our risk graph is a straight line. In the options trading world, we say it has no gamma, it has no curvature. But what the risk graph is showing in this case is if the stock rises from 100 to 101, that's a $1 rise. We have to trace a line in this case up to our risk graph. That's the way we read it. We find our stock price first, and then we have to find the line. And it tells us that we are going to make $1. All right, so that's because this axis over here are profits and losses. If we're at 0, right there, we didn't make, we didn't lose. So if you bought shares at 100, that's why you're crossing at 0.
Some of you may know this as something called a run rate, which is
Rise over run, exactly. Yeah.
Here's another quick note on this. So this slope, like if you added 100 and made it 200, it would be a higher slope, right? I mean, it would.
We're going to get to that. Yeah, I'll show. I've got slides for that.
Keep in mind, everyone, the platforms, like, how would you say it, Bill? They readjust themselves.
I have slide. We'll look at that. I know where you're going with this. Yeah, we'll talk about that. But the main point to see is that this is the delta. Delta is simply, as Stu said, the kind of the rise over run. If we run $1 to the right, we lift up by $1. The difference is for shares of stock, that will always be 1.
Always.
So stock always has a delta of 1. That's all the delta is telling us.
No matter what the stock price is.
No matter what it is or where we measure it. Now here I've measured it from 100 to 101. If we measured it from 101 to 102, that would be a $1 jump for a $1 rise. All right, or we could measure it from 100 to 102, would be a $2 move for a $2 rise. So it's always going to be dollar for dollar. Now, as Stu was mentioning there, that this is for 1 share of stock. Not many people buy 1 share of stock, but we can certainly look at it as just 1 share. So if we wanted to do more deltas for our position for some reason, what do you have to do as a stock trader? You either have to buy or sell.
More stock.
Yep. And so as an options trader, you'll find out as you get more advanced with options, the option will do that for you automatically. It's going to automatically
the only way to change that number on stock is to buy or sell.
The only way to do it with stock is to buy or sell. So let's take a look at that. Let's say you have 0 shares of stock in your account. We would say you have 0 deltas. And that's telling you that in this case, let's say the stock is 100. If it rises to 120, doesn't help you, doesn't hurt you. Look what it did to your profits. You're still at 0. Or your losses. Stock falls to 80. Still at 0. Didn't help you, didn't hurt you. So the way to visualize that is if it's flat, think of it again like a snow skier. You're not moving. You have no rate of change. You're not sensitive to changes in the stock's price. In other words, you have 0 deltas. But now let's say I tell Stu to buy 10 shares of stock. What happens now? Well, now he would have 10 deltas in his account. And what that tells you is that if it rises $1, if we were to zoom in there, we would see that he would pick up $10. All right, so that's all it's telling you. So it's just showing you that we're picking up $10 for every dollar move in the stock. It's telling us how sensitive we are. And of course, because these are shares, if it falls $1, he's going to lose 10. But it's always, in this case, $1 move equals $10 up or down. If he buys 20 shares, now this is what Stu was kind of talking about before, this slope, our snow ski mountain, is getting steeper. There's 20 shares, 30, 40, 50. You can see that as you continue to add shares or deltas, is it a good thing? Is it a bad thing? Well, as always, it depends. For our snow skier friend over here, if the stock is going up, lots of deltas is a great thing. That's where it's fun. Where is it not so fun? Over on this side, because now you're every dollar down, you're losing $100. So now I think this is what you were talking about before, Stu, where you have to be careful with the broker's platform, because sometimes people might look at this on, let's say, their Thinkorswim platform. They go, oh, I don't have very much risk, because that's a fairly flat line.
Mhm.
Would you agree that that green line is fairly flat? Yeah,
Yeah.
so it might look like there's no risk, but that's because of this scale, all right? And so what a lot of brokers platforms will do, if that were 2,000 shares instead of 20 shares, what's going to happen? That number is going to be bumped up by 100. Okay, so or a factor of 100. It's just 2,000. We've got 100 times more.
Slope. So what Bill's saying is the slope would look kind of the
Might
same.
look exactly the same, but if you, I could change this
Number.
number and make that 2,000 or 20,000 or 100,000.
Yeah.
And it might look like there's no risk because you're visually looking at a fairly flat line. The point is always make sure you look left and say, what number does that correspond with?
In other words, what am I going to lose if it goes the wrong way?
How much am I going to lose? Not just that the line is flat, right? So you can also imagine if we made this 10,000 or a million, I could make that blue line look almost flat. See, so again, that's why you have to be careful about just trying to visually think of more risk as more slope. If you keep this scale the same, that is true. But that won't always be true on your broker's platform. So anyway, that's delta for shares of stock. Now, when we get to options, here we are at expiration. This is our expiration graph. We have delta 1 on this side, and we have delta 0 down here. Now that we understand delta, we can see why we have, think of our snow skier over here, completely flat. You have no deltas. So that tells us that at expiration, if the stock, this is the 100 call, that's where the bend occurs. If the stock goes from 70 to 71, how much is that position going to change? 0, right? If it goes from 50 to 51, not going to budge. From 85 to 86, not going to budge. Why? Because they all line up on this red line. But that's only in the final seconds on expiration day. It could be a completely different story, as you'll see in a moment, if we have time on the clock.
Or if it's really a zero delta option, which you can have time on the clock and still have a zero delta option.
Well, yeah, you just be much further to the left,
And
correct?
keep in mind, everyone, this is an expiration graph, right? If the option, if the option has some delta, whatever it is, then these numbers will change with whatever the delta is. That's what the delta is.
Exactly. So now sometimes even a lot of traders find this confusing. Why are we delta 1 above our strike and delta 0 here? Well, think about it. If the stock is 100.01 or higher, it's in the money, you or somebody would have the incentive to exercise that call. If you exercise the call, you're going to be long 100 shares, and therefore you're delta 1. And that's true for all stock prices above 100. Conversely, if it's 100 or below, you'd have no incentive to exercise, in which case you'd have no shares, and that's why you're delta 0. So at expiration, the option's either going to become shares by somebody or become no shares in the extreme. That's why at expiration, that's what the risk graph looks like. However,
Here's another way to say that. So think about this logically, everyone. If you have a 100 strike price and the stock is trading at 90, no one's going to exercise their right to buy that stock at 90. I mean, at 100 when they can buy it in the open market at 90. So
that's right.
it becomes what we call a worthless option, which it's no money and it has a zero delta.
0 deltas. Yep. Now, prior to expiration, things are different. Remember, this graph, this hockey stick shape, only applies at one very small moment in time. Let's call it 3:59 p.m. on expiration day. Outside of that little tiny window, forget that this thing even exists. Because if we have, let's say, 30 days to expiration, now we're going to be on the red line. Now, what's still nice about putting the black line overlaid with it, or the expiration graph, is we can see where that red line is ultimately moving towards. But now we see something interesting here, Stu. We're not either delta 0 or delta 1 because we're curved. So again, visualize it with our snow skiers. What do you notice? This guy up here is on the black diamond. Very, very sloped. That's going to be more like delta 1.
Might even be a double diamond.
It might even be a double. This might be 75 or 80. Still got a lot of slope. He's just not as sloped as this guy. This guy might be 55 or 60.
He's the intermediate guy.
Intermediate, right? We're not saying he's not moving. He's just
Yeah,
not moving as fast as this guy. Now, this guy's on the bunny slope,
yeah, he is. Yeah.
right? We can see that it's not flat, not down here, but he's also not as certainly not as steep as these guys.
But he's still skiing, isn't he?
He's still moving. So that's a good way to visualize. You
Skiing.
still have deltas.
Yeah.
You are going to be somewhat sensitive to changes in the stock's price, just not as much as if the stock were up here or up here. And then this guy down here, dead stop, 0 deltas.
No deltas. Now that doesn't mean that the guy at the end there can't turn around and pick up deltas, right?
That would require the stock to move.
Exactly.
Yeah.
Yeah.
Yep.
Nice.
So at any rate, just this is why that we get different deltas at different times. So the thing to see is that delta, one interpretation, is the slope of this line. Again, think of it when we talk about slopes, like hitting the slopes, like with snow skiing. If you are on a very steep slope, that's all relative, but if it's a steep slope, you have high deltas, relatively speaking. If it's fairly flat, you've got relatively low deltas. So that's really where all of these interpretations of delta are coming from. Now, what does it mean? This also confuses people. Let's look at this risk graph, Stu, and say your option right now has 50 deltas.
Mhm.
What in the world does that mean? We're looking at this going, well, it's not a straight line like it is for stock. How can I have 50 deltas? And why is it only for right now?
Means I'm in for
Well,
$50 on a 1 point move. What else
yes.
does it
Well, but where is that on this graph? What's it showing us? Well, here's a good way to visualize it. Let's go back to that one where we saw the line moving with our snow skier on it. And let's pull the 50 delta line off of that. There's 50 deltas. That angle or that slope is 50 deltas. Now, let's match it up at different areas on the red. Let's say over here. So just take a look at this right where they cross. Does that red snow ski slope right there look like the blue? No, red is much steeper. So remember, we know that the blue has 50 deltas. That's 50 shares of stock overlaid on our option. It doesn't look like the red. So that tells me the red is not 50 deltas. I can see it's more. Well, so that's not a good match. It's not 50 deltas in that area. What about down here? Well, again, we line them up. Can't even see the red back here. It's hiding behind the black, but it's basically delta 0. And this blue is delta 50. So that doesn't match. And it turns out no matter where you overlay this blue line, it's never going to match except in one spot. And where is that? In this instance, in this little tiny circle. And so what we're doing is we're saying that that blue line is pretty hard to tell apart from the red line, but only here. So we can certainly tell the difference out here. We can tell the difference out here. I just can't tell the difference right here. So even this kind of looks like it's a fairly wide range where we're delta 50. Not true, is it, Stu? What you
Yeah.
have to learn conceptually when we say that our option has a 50 delta, we have to look inside that circle and keep zooming and keep zooming. We're talking about fractions of a penny. Because if the stock even ticks up, let's say by a penny, you're technically a little bit higher up on that red line. You've got a little higher deltas. Now you might need to go out 4 decimal places on your broker's platform to see it, but you've got more deltas. And if the stock ticks down 1 penny, you've got a little lower delta. But that's the key to see when we say that your option has X delta, we're saying where does that, in this case, 50 delta line match up on your risk graph? So now that's a good visual to show it's only for a very small, kind of a very small range of stock prices.
Let's keep it in perspective, though, everyone. While it is actually in real life infinite iterations as the stock is moving here, we don't really care too
No.
much about that. I mean,
No.
you have to be practical about it. So
Right. What's the difference of 50 deltas versus 50.0001? Who cares?
So,
Or
right.
the difference between 50 and 52 deltas. Who cares?
The biggest thing here that we want everybody to understand is that the deltas are dynamic and the deltas
They are
change,
changing.
and we happen to measure them by $1 moves. But that doesn't mean that 50 with a 5 gamma, it should become 55 on a dollar move. It doesn't go from 50 to 55 just like that, right? It moves up
Yeah.
incrementally.
Yeah. Kind of slides up. So let's
Yeah.
look at it visually here. Down here, we've said that this is 0 deltas. What's that telling you? What's one interpretation of delta? If the stock rises $1, our option's going to pick up how much? 0. Why? Because we have 0 sensitivity. We have 0 slope. And if the stock moves up here, we look on our broker's platform. Now maybe it says you have 25 deltas. That's telling us that that little circle right there looks about like 25 shares. So now if the stock rises $1, your option's going to pick up about 25 cents. Why? Because it's effectively holding 25 shares. What about if we get at the money? Going to have a 50 delta, stock rises $1, your option rises about 50 cents. Now some people might think, well, wait, with 50 shares, you'd have 50 bucks. True, but remember options control 100 shares, so 0.5 times 100 would be 50 bucks. That option would pick up.
Yeah, it's fine. People do get lost in that lingo a little bit, but that's
Yeah.
just how we
Yeah.
talk.
So if the stock is up here, now maybe we have 75 deltas. If the stock rises another dollar, whatever this number is, maybe at 125 to 126, our option's going to pick up 75 cents because we have 75 shares or 75 bucks. It's just showing you how sensitive your option is because of the slope of that red line.
Kind of
And
a
then
good metric to know, don't you think, Bill? I mean,
it's
well,
exactly what
how many
everybody's.
shares do I have, or how many equivalent shares do I have, or what's my delta? And if the stock moves 5 points, what's it gonna, against me? What's it gonna cost me, or my way?
Right.
What? You would never if you own shares of
Easy with
stock.
share, right? Easy with shares. Conversation's over.
Would you go into a management role of shares without knowing how many shares you had at any given time? I mean, think
Right.
about how ridiculous that is.
Yeah.
Hey, Bill, can you manage my portfolio? Here's a bunch of stocks, but I'm not going to tell you how many shares I have.
Exactly.
Really? I mean,
Right. See, the difference is once I know it with the shares, assuming you don't buy or sell, it's the same. That's not true for the option. People will buy an option, they'll say, "Well, I bought it down here with a 40 delta, and then now the stock is way down here," and they'll go, "How come it's not picking up 40 cents anymore?"
I
Well,
can't
it
even begin
moved.
to talk
The
about how
stock moved.
important this is. People often buy an at the money 50 delta option, and the stock goes their way. And now it becomes an 80 delta option.
Yeah, they still think they have 50.
And they don't realize like what they're carrying here, and then the stock goes back down, and then they lost all their profits, and they can't kind of figure out like what happened other than the stock went down.
Yeah.
Well, you had 80 shares worth
You,
of
you took
movement
you
at
took a
that point.
fall on the black diamond compared to a fall on the bunny slope.
Yeah, maybe you should have done something up there if you were
Maybe
worried
should have
about the
done something
downside.
up there, right? You can move yourself. That's one of the reasons that we hedge or roll or morph is maybe bring us down to a little safer section.
Yeah,
Safer being relative to you. Now, if you're a risk seeker, maybe you want to roll it up this way.
it maybe.
But you have those choices as options traders.
Maybe
So
you want
let's
to
look
buy
at an
another
example
five.
with slope. Stock is
Yeah.
100. We have a $100 call trading for 3. We look on our broker's platform, tells us that the delta is 60. If the stock rises $1, our $100 call should pick up delta because we're effectively holding 60 shares. We should pick up $60. And that's what happens when our call goes from 3 to 360. Okay, so but this definition is coming from the pitch or the slope of that line. Right.
So I know everybody's thinking at this point, well, yeah, these guys are wrong because what about the gamma portion of it? We are isolating the delta.
We're just isolating delta.
We are not taking into account the gamma piece. We will be addressing that in future videos.
Yeah, that's just looking at just delta. But as Stu was saying, in the real world, if you're going to make it a full dollar move and your broker's platform says six, or do it in a pricing model, you'll see it's not going to move by delta. It's going to be a little bit more, and that's because of gamma.
Yeah,
But that
test it.
just starts to muddy up the waters. Conceptually, we're just saying this is the slope of that risk graph. All right, so that's definition 1 with the slope. Definition 2 is the percent of a stock price change. It's the same idea. In fact, we kind of alluded to it here. It's just a different way of kind of understanding it. So what we're going to say here is for any change in the stock's price, delta shows what percent your option will capture of that move. So again, we have a delta of 60. The stock rises $1. I could say, well, I'm going to pick up 60% of that dollar, or 60 cents. But again, that's kind of if you understand the slope, it's just a different way of looking at it.
Same exact thing.
Yeah. And I could say, well, if the stock rises 40 cents, I'm going to pick up 60% of 40 cents. My option should pick up about 24 cents. So sometimes people find it easier to say, I'm just picking up delta percent, again, for a very small move, of whatever the change in the stock is. And, sometimes, as we'll find out, another definition, and we always assume that it makes a $1 move, and people get confused. Well, what if it moves 50 cents? Well, it's just half of that. What if it moves a quarter? It's just a fourth of that. So delta applies always for very small ranges. So again, this applies to small changes in the stock's price. Super technically speaking, remember we zoomed in on that little circle, fractions of a penny. Now, in the real world, we don't need to be that precise about it, but just understand that if the stock goes from 100 to 110, you shouldn't expect that you still have a 60 delta.
Yeah, that's the point.
It's going to be way different.
Yeah.
Okay, so that's another way to understand. I have a 60 delta, stock has moved X amount. I'm going to pick up 60% of that X amount. Just another way to think about it. All right, definition 3. Now, again, I'm a little hesitant to put definition 3 in here. This is what I just talked about. We're going to fix it at a $1 change in the stock. So this is usually how they teach people when they're new. Delta of 60, stock rises $1, the option picks up 60 cents. So it's exactly what we just did. We're just saying we're picking up 60% of the move in the stock. They just fix it at $1. So now this becomes dollars. It just becomes easier. Right, I've got a 70 delta call, stock moves $1, my option picks up 70 cents. That's why some people find that easier, but it's really definition number 2, just applied to a $1 change. So again, you can see that we're really splitting hairs, and that's why a lot of times we think that people get confused with it, because there's many interpretations, but they're all based off of that slope. Now here's another one. Our 4th definition is a hedge ratio. Now this one doesn't come up too often. Now I know in your line of work, Stu, you use this all the time, right? Live by this.
That's because stock was our tool.
The stock was the tool to hedge it, sure. So let's say we have $100 call for 3. The delta is 60. That's on our broker's platform. Stock rises $1. We know the option will pick up 60 cents. So that tells us that we have a sensitivity to the tune of, let's call it $60 to every $1. Well, what if I wanted to neutralize that? What if I didn't want my position to move? And there might be reasons why I would want to do that. Well, I could short 60 shares of stock. And that would put us at delta 0, or what's called delta neutral. However, here's the big however. When you talk about this for people, they say, oh, I've neutralized my position. I have no deltas. Not true. You have no deltas in a small range. You don't have 0 deltas forever. So let's take a look at our risk graph. This is the current curve. This is our $100 call with a 60 delta. I think the stock was at like 101.30 when I created these. So it was slightly in the money. That's what gave us a 60 delta. It's a 100 strike. There's our risk graph. We can see it's trading for roughly $3. That's our maximum loss down here. So there's our risk graph. Now, what would happen if we short 60 shares of stock? For all of you out there in YouTube land, can you visualize what that's going to do? All right, so think about it. The call is going to delta 0, but you're going to be short 60 shares out here, so you're not delta 0. You're more like delta negative 60 way out here.
And that's kind of an issue too here, where people just, look at the option, they don't look at the hedge, or they don't look at the stock, or they're just isolating on, one of the 2 or 3 legs, whatever they're doing. You got to look at the whole position, right? So if you have, like Bill says, if you sold 60 shares of stock, remember we said before, that's never going to change unless you change it.
That's right.
So short 60 shares is short 60 shares. The options delta goes to 0. You're now short 60 net deltas.
That's right. And over on this side, similar idea. that this option is becoming 100 deltas, or
Yeah.
delta 1 times 100, right?
Mhm.
Because each contract controls 100 shares. So effectively, we have 100 shares or 100 deltas, but we're also short 60 shares. So on a net basis, we would have 40. So we're a
So
little
how,
asymmetric here. I've got minus 60 on the left, I've got positive 40 on the right. And so if we overlaid negative or short 60 shares on top of this and then combined them, we looked at the combined effect, we would get this. And that's why we're seeing this asymmetry over here. See, for stock is roughly at 100, again, like 101 and change. But if we move up 20 bucks, it lines us up with 600. Whereas if we fall to 80, it lines us up with 1,000. Now, a little
so-
caveat here, that does not mean this is a risk-free position. I know it looks like it the way that I shot this, but we still have to pay back the short shares. I did this. It just makes the graph a lot easier to read.
at some point,
At some point, right. And
yeah.
so that would actually shift this down. But the point to see when I said you were delta neutral, look at how that black line is flat just right there.
So
Not flat here.
here- here's a cool application, everyone. Suppose you have some suppose you have some, I'm thinking ahead. Suppose you have some call that, really rocked for you. And now, it's trading at parity or, a few pennies over parity. Oh, I can't wait to sell it. Sold, sold, sold. Right. You just lost everything to the left.
That's
Maybe
right.
it'll come to fruition. Maybe it won't. If you sold the shares against it, you created the ability to participate in that left side. That's actually
That's right.
called this.
Yep.
Right. And that's why it's a good idea to kind of hold on to those positions, instead of like sold, 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 right? There's nothing to gain from the upside or downside. Once you sell it, you're done,
Right.
right? You're over, it's finished, you're out, you go have your whatever and you're done. But when you create an opportunity for basically nothing in the future,
Right.
that's where the ticket is.
Beautifully said. And that really shows why options are dynamic. And if you really understand them, it's not just let me buy it and let me sell it and now let me find something else to buy. That's how everybody does it. Drives us crazy. We're going, you had a much better opportunity to do this, this, or this. But they just think it's like shares of stock. Buy it, close it, buy it, and close it. Missing the whole boat. Now, let's look at the net deltas, which is kind of what we talked about. If we graph just deltas, now remember this is P&L because these are dollars over here. So this is going to be, those are not dollars, those are actually deltas over here. But these are the deltas. And we can see that we're starting to approach, if we kept coming out here, we'd start hitting 40 deltas. Why is that? Because we're long 100 on the call, we're short 60. So in the limit, as we keep chugging along this way, we're going to eventually hit, if I kept zooming out, this black line would come right up there to 40 and flatten out. And if we go down, what happens? If we kept zooming out, we can see that we're hitting towards minus 60 deltas. And that's because we're minus 60 shares or minus 60 deltas on the short stock, 0 deltas on the long call. So over on this side, we're going to be short 60 deltas. So that's kind of what your net delta graph looks like. So again, what we wanted to show is that all of these definitions stem from understanding the slope, or think of it like a snow ski mountain, of your risk graph. These other definitions are different interpretations of that same idea. So to close with, Stu, in how many ways can you interpret delta? We've shown you 4, unlike a lot of times we don't really have an answer because there really isn't an answer. I think these are 4 of the most common. They'll certainly get you started. But think about it. What are some other ways, now that you understand what delta is, other ways of interpreting the slope of that graph?
Yeah, this is really an exercise in just opening up your head a little
Exactly.
bit. Kind of maybe, let you think about things in a different way.
Yep.
That's what Joe and I really try to do each and every week here.
Well, it's not like the answer is, don't email us and say, what's the answer? We're looking for 7 or 6.
What's the
There
next
is.
one and what's this and what's
Who
no,
knows? I don't know. Those are the
not
4 that
that
I
bad,
typically go
right?
with.
It's just important that you know what delta is and that
Right.
it is dynamic and that it changes and it goes up and it goes down. Here's another one. Like, so I bought this call at whatever, $3, and now it's 10-cent bid at 20 cents. I guess I should sell it because it's showing me that I don't really have any delta or a 1 delta or something. Well, why?
Why?
Why? It was a 50 delta. Now it's a 2 delta. Well, maybe it'll become an 80 delta in the future. You're gonna give that
How
away
many
for
times have
10
we seen
cents?
stocks gap up 40, $50 overnight, right? It
I
happens.
mean, it's ridiculous. But all this, that discussion really comes to fruition if you understand what it is that you have and what you're dealing with and what the future has, what the possibilities are of positions with respect to changes in time and stock price and vol and all kinds of cool stuff like that.
Yep. So we hope we've given you some different ways to interpret delta. So for all of our Q&A people, which today I think we have a meeting, don't we,
We do.
at noontime. Let us hear your thoughts. Think about different ways to interpret it, and if nothing else, it will at least stretch your imagination, help you to understand what it is when we're talking about delta. But every time you come up with a different interpretation, go back to that snow ski idea, and you'll realize it's just an extension of that. So we hope that clears up some of the interpretation errors that or confusions that people have. And with that, I think that's a pretty good place to stop. We'll see many of you at noon. And for everybody else, we'll see you next Thursday on Coach's Corner, and we'll see you then.
Yeah.